With more than 6,000 small and micro-cap companies listed, if you're looking for the next apple at the earliest stage, then Channelchek truly is the orchard. The listed companies support Channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for Channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the virtual Roadshow series presented by Channelchek. This Roadshow features Chris Taylor, President and CEO of Great Bear Resources, TSXV ticker symbol GBR, OTC ticker symbol GTBAF. Following a formal presentation, he is joined by Mark Reichman, Senior Research Analyst for Noble Capital Markets, a FINRA-licensed, SEC-registered broker-dealer, for a Q&A session featuring questions that were submitted by the live audience. You can find Noble's research on Great Bear Resources on Channelchek.com or by clicking the link in the description. With that, I am pleased to present Chris Taylor.
I'm Chris Taylor. I'm the President and CEO of Great Bear Resources. Great Bear is a gold-focused exploration company in Canada. So we're located, the project, our flagship property called the Dixie Project, is located in the Red Lake district of Ontario. And Red Lake is the proverbial high-grade gold mining capital of Canada, certainly one of the largest gold mining districts in this area. So what we found at Dixie is the largest new gold discovery in Canada in terms of the physical footprint of the system. It extends for kilometers, it goes right to the surface, and it occurs right beside the highway. So I'm going to be talking about this project, and I'm going to be talking about what you can expect from the company over the coming year or so. So with that, I am going to be making some forward-looking statements. Just keep that in mind as I'm speaking. It's part of my job. You can look at our disclosure policies on our website as well if you like. So Great Bear, why is it interesting? Why has it been so interesting in the market? Why has it been one of the largest growth stories in the gold exploration space? Well, as I mentioned, it's a very big gold discovery. We're very well funded at the moment. We have over $90 million of cash on hand. These are all Canadian dollar terms. What that means is that we don't have to go back to the market anytime soon. This year, we're about halfway through the year. Obviously, it's June. We had about a $45 million exploration budget this year. And with the money that we have on hand, we'll probably have roughly about $60 million in our treasury by the time we get to the end of the calendar year, and probably a similar spend again in calendar year 2022. What I'm getting at is that we don't need to go back to the market to raise more money to do the things that we're doing, which is a lot of drilling to define a high grade and bulk tonnage gold resource that goes right to the surface on our project. And that means that we have a lot of levers under our control, which is unusual for a company in our state of affairs. We are not a producer yet. We've made a major discovery, but we've had a great deal of success over the last number of years, raising money and spending it carefully and avoiding dilution in the stock. And I'll talk about that as well. There's only 57 million shares issued and outstanding with Great Bear, so highly unusual. It's a fraction of the share count of any other company in our sector with the kind of market capitalization approaching $1 billion that we have. 4 years of constant success, and that's really kept that share count under control. And increasing institutional ownership. We have seen over the last period of time here of about a year or so, a larger and ever increasing number of sophisticated institutional investors who have been accumulating positions in Great Bear. So we'll talk about that a little bit later too. Really big program, as I mentioned, and really good people within the company too. And I'll just keep rolling through these slides. This is why, the image on the screen in front of you is gold that we found in 2 of the zones that we're focused on here. So the top left one is one of the high-grade satellite zones on the project. We call it the Hinge Zone. It was a discovery we made in 2018. And all the other gold that you see here, and here, this is all from the LP Fault Zone. And the LP Fault Zone is this very large continuous gold discovery, which is the one that we've been talking about for the past 2 years since its discovery. And I'm going to get out my trusty pen and do a little bit of doodling on the screen here. So with Great Bear, the question is, you've been around now for a few years. We know you've been successful. We know you keep hitting gold, but what's coming? What's going to change with the company over the next few months? Well, this is the last few months that we have now of pre-resource drilling. So what we're aiming to do is drill off a grid over this zone. So the LP fault zone from there to there, you see it on the screen. That's the zone projected in true size to the surface. Now, what we've done is you've drilled this big gold-bearing fault structure on our project that extends along from about here to about here, and that's about 11 kilometers of total strike length. And that's, like I said, every drill hole that we've put into that thing has hit gold mineralization over 11 kilometers of strike length. And what we're doing is we're drilling a grid over the central portion of that new discovery where it's thickest and highest grade and most continuous. And that is this more than 4 kilometer long drill grid that we have that we're drilling down to approximately 400 meters depth. So just the near surface, 0 meters depth down to about 400 meters depth, where we're defining this initial maiden mineral resource estimate. And when are you going to see that? Well, that estimate will probably be put out into the market early next year. I don't have the exact timing yet because I have different engineers, geostatisticians, I have to say that word properly, and other geologists working on modeling the thing. And it's a very big system. So we will be done the drilling this year, calendar year 2021, and then all the calculations, the block modeling, and the resource definition will be completed, and that'll come out early next year. And why is that important? Well, based on what we're seeing right now, you're going to be looking at something that has few exploration parallels in our space, in our industry. So that's what we anticipate. And the thing to keep in mind as well, I'll show you how this looks in 3 dimensions, but even when we put out that maiden resource estimate, that's only going to be the top of the system. You know, if I showed you surface at this level, you're walking along the surface, and I'm talking from 0 meters depth to about 400 meters depth, where we expect to see that mineralization estimate come out. We've already drilled it twice that deep, down to 800 meters depth in all the zones. And this material here will have to be defined, you know, as we go forward. But we think even within that surface to 400 meter depth, we think that will be an industry leading initial resource disclosure. And we think that'll have, you know, a lot of merit to it that will show the economic potential and really a development plan for the project as well. So what we're doing in the last number of weeks is issuing these high-grade domains into the market. These are portions within the bigger mineralized system where the gold mineralization is higher grade, very high grade in many instances, and continuous. And that's important because if you have continuous high-grade gold that goes to surface along kilometers, that's what's going to be one of the dominant value drivers for this project. So far we've found 17 of these. We put 3 out into the market so far. What that's letting the market do is calculate ounces in the ground of high-grade gold on an ongoing basis. So what we'd like to see is that people are basically keeping a tally from now until the end of the year, so that we align expectations with what you're going to see for that initial mineral resource disclosure. And of course, we're providing all the assay information, the 3-dimensional information, and other information to go and make those decisions on your own. But we want to provide good guidance to the market as we continue to finalize this drilling. And of course, around the high grade, we have these bulk tonnage type domains. This is going to be like the big low grade systems like you see in the big deposits in Canada, Detour Lake, Canadian Malarctic, these sort of things that surrounds the high grade gold that we've found. And that's being modeled out separately from the high grade. Obviously, from a production standpoint, a lot of that material will be most likely taken out of the ground together. But for calculation purposes, they're being looked at as separate entities, and then you roll it back together and think about how that's going to be extracted long term. And this is the kind of studies, the economic projections, the PEAs that will follow on resource disclosure. So why is this important for the area? Well, what we see in the Red Lake district is one big mine that's been in operation for 80 years and a lot of other small mines. There's a total of 30 gold mines in this district, but there's only one that has really serious size, and that is the Red Lake Gold Mining Complex that's now owned by Evolution Mining. You know, as an 80-year-old mine, I think it's safe to say it's long in the tooth. I think Evolution's going to do a great job of bringing this thing all the way through into, you know, probably more than a decade of additional production. I'm very bullish on how they're going to do. They seem like a really good team, but ultimately that's only going to last so long. In the intervening time, since 1935 up to a couple of years ago, we have found the largest new gold mineralized system in this area in decades at the Dixie Project. So we're very happy that we're going to be able to provide something to this district, which has the potential to be a very long-term benefit to the community. Because what we found is big, and because it's been high grade and because it's had all these excellent results, we have analyst consensus now of share price targets from $22 a share to about $36 a share. We're currently trading about $16.50 a share. So it's showing you that the analyst community has recognized the size and the value potential of the project and is anticipating these sort of values being achievable over the relatively near term. And remember, that's not the full potential of the project. That's the potential in the first sort of 400 meters from surface of the project, but it's giving you these sort of values, and we can look at that in 3D. So I think I'll show you a couple of slides. I do want to mention that we have an exploration agreement in place with the Wabauskang and Lac Seul First Nations. These are the local First Nations that we've been working with now for the past 4 years. They have similar agreements in place with all the mining and exploration companies in this district. They've been wonderful partners to work with on the project, and we look forward to long-term cooperation there as well. And with that, I'll show you I find I can save a lot of speech by sometimes showing just progress. What you're looking at here is looking down from space. Remove all the geology, remove all the topography, remove everything that you would normally be looking at, and just look at the gold results. So this is a map view. If you were flying above the project and looking straight down, this is what you'd see. So 2 years ago, exactly 2 years ago, we made the discovery, or about 2 years and a couple weeks ago, we made the discovery of the LP fault zone by drilling some holes in this area. The key when you're looking at this map is that the pink dots here are drill intercepts of greater than 20 grams per ton, so 2/3 of an ounce per ton. So if you think about the average big gold mine in the world today being about 1 gram per ton, intercepts like this are about 20 times higher than what you would typically see. And then of course that goes all the way down to the typical intercepts that you'd see in the less than a gram to a gram range and 1 to 3 gram range. And you can see that what we found here is big. The scale that you're looking at here, that's 1/2 kilometer long. So what you have in total on the page is about 4 kilometers that you're looking at here. And that's the area that we're grid drilling. But from June of 2019, if you went and fast forwarded to June of 2020, when you had about 100 drill holes at that time, and then go to this year, and in this data set, you have just under 320 drill holes that are making up that image in front of you. And what you can see is look at the pink dots. Initially we had a few pink dots that were scattered over kilometers, some of the red dots, the 5 to 20 grams, and some of that low grade material as well. As we did more drilling, we'd step out a kilometer and we'd hit things again, putting a circle every kilometer. We noticed it was the same geology and the same gold mineralization again and again and again over kilometers. And frankly, the stock market had a hard time believing this at this stage, because it's so big that the average gold deposit that people are drilling off tends to be about 200 or 300 meters long. You can look at some comparables in the space right now. Newfound Gold's a good one. They have a zone that's about 380 meters long now, called the Keat Zone, that they're deriving a lot of benefit from. The market's used to seeing stuff like that. The market is not used to seeing continuous gold mineralization over many kilometers, and that's what we have here. So there was skepticism at this stage. There just wasn't enough data for people to see, and what they imagined is that if we drilled a hole here and we hit, but we drilled a hole here, we would probably miss, because nobody has seen continuity on this scale for ages and ages. So, but what we found as we did more and more drilling is what you see here. It's just filling in very, very nicely. And to the point where I get asked the question quite a bit now, well, you've got almost 320 drill holes published on this target. Why don't you have a resource out yet? And the reason being is simply size. So I'll discuss size for a few more slides, and then we'll move along to the valuation case. So the continuity on this scale, again, the scale bar is 1/2 kilometer long. The average mineral deposit would be smaller than this. So when you're looking at this thing, or the average gold zone, I should say. So when you're looking at this thing, what we've been doing is taking the high grade gold, and you can see that it's defined in these predictable panels and trends that run along the central portion of this thing. And I'm delineating some of those here. Just turn off my phone. And then you can see around that, what we're modeling out is these bulk tonnage domains. That's that gram, sub-gram, couple gram material that occurs around that high grade material. And what we've been disclosing to the market recently is separate disclosures of the high grade zone. So for instance, BR7 is this one here. And I'll just draw the arrow back to where that black box is there. And then these zones, Oro 20 and BR1, those are right here. This is BR1. So we disclosed in that image would be that portion of BR1 as a high grade domain. And then there's a little one in between, which is Oro 20, which connects the other two. And what we do is we put out every drill hole that intersects these panels and let people sort of run the numbers on how they look, how the connectivity looks. And as I mentioned, there's 17 of these things that we see scattered, not scattered, but in line along the LP fault. And so what we're seeing is that these occur. The initial assumption when we found it is that we'd see scattered pockets of high grade mineralization. That was actually totally wrong. What we see is predictable domains, predictable sheet-like domains, hundreds of meters to kilometers, or over a kilometer in strike length of predictable high-grade gold. That's what we're showing here, here, and here. That's what we're showing in the image here, and that's what we're showing in this image here. And we see those repeated again and again within the wider halo of lower grade kind of bulk tonnage style mineralization. And then I think to explain the size, this is where I run out of words a lot of the time, because it is difficult to explain something that has this sort of size. And when I'm looking at it here, I thought I'd make some simple images that explain just how big the thing is. So that is the map of the high grade gold and the LP fault going along kilometers that we're drilling off the grids on right now. And here's the Dixie limb and the hinge zone, which is basically folded geology with high grade gold mineralization. And they also go right to the surface. These all go right to the surface beside each other on the project. So what does it look like if it was superimposed on an area that you're more familiar with? So I took downtown Toronto. A lot of our shareholders are based in Toronto. Of course, people have walked around Toronto and sort of understand the scale. So if you superimpose the gold zone on top of downtown Toronto, you could walk from Ossington Avenue on the northwest limit of our drilling all the way to Parliament Street on the southwest limit of our grid drilling. And remember, we actually have gold for another 6 kilometers on top of this. This is just the 4-kilometer middle area that I'm talking about. But you would walk, that would take you over an hour. I've actually done this walk previously, just when I've been at conferences and I need some fresh air and a bit of a break. And that would take you well over an hour to walk across that if it was downtown Toronto. And then down here at the Sky Dome, you'd be looking at the Dixie Limb and Hinge Zone as satellite zones. What's different here, I have to emphasize this, what's different with the LP fault discovery than virtually any other discovery like this in the world today is that if you took a gold sample, you had a little diamond drill rig with you at the time, and you put it into the ground as you were walking along, we have seen every drill hole hit gold mineralization over the entire distance that I'm talking about here without fail. Every single hole has hit gold mineralization, and I did a really long webinar on this a couple of days ago. That's on our YouTube channel. It's Great Bear Resources. You can look it up on YouTube. If you have an hour and a half of your life that you want to learn a great deal about geology in our project, and you got maybe a beer or a glass of wine and some popcorn, maybe that's a good thing to watch. But you have to try to explain that if you were to sample the ground as you walked along this trend, every step that you take based on what we're seeing right now, you would expect to hit gold. And that's very different. I have seen other maps generated from projects where they show several kilometers of gold bearing grab samples or drill holes or whatever. It is not part of a continuous gold zone like what we see here. Here you would expect to see gold in all the places that you sample, and certainly we have drilled now 375 holes into this, and it's a visible gold dominated system. You're able to see the gold in the drill core when you do the drilling in the majority of drill holes, and along this LP fault trend, this area that I'm showing you here, almost every drill hole has some visible gold in it, and all the assays that we're getting back show excellent continuity of the zone on this sort of size. The other one that people are more familiar with maybe for size from around the world would be Central Park in New York City. So I have been here on marketing meetings relatively recently, just prior to the COVID pandemic, and I did walk around Central Park, and it would take you a good hour. If you want to go end to end in Central Park, it's hard to do it in a beeline, as they say. So it's going to take you a while to walk across that. Well, the gold zone that we've found, coincidentally, is almost exactly the same size as Central Park. So this again speaks to the question of, if you walked along Central Park and you took a sample everywhere that you stepped, in our gold system, if it was there, you would encounter gold mineralization in every step from what we've seen so far. And that's with hundreds of drill holes informing the data set. So that's incredible. And that's what really sets this apart from other gold discoveries around the world. And also it shows you why we're not finished the resource drilling. I mean, this is 2 years after the discovery. The very first hole went in right here in May of 2019. So when the resource comes out on this, when that shallow maiden resource comes out, it will be the fastest delivery of a maiden resource on this scale in the industry's history. So some people are impatient that it hasn't happened yet, but it is going very rapidly from an absolute point of view. And the reason it's going fast is because it's so predictable. But this shows you that size. I think it kind of speaks volumes, and I just said a bit of a pun because now I'm going to show you a volume. So this is the volume. So if you took Central Park, and you thought about drilling off a cube, effectively this three-dimensional rectangle, we have to now drill, to define this gold system, a rectangle that's 4.2 kilometers long. We've already drilled it down to about 800 meters depth, which would be about that depth there. And every drill hole, as you see here in the data, is hitting gold mineralization. And what we notice is this is those pink dots showing you that you get these sheets of high-grade gold. They're open to depth. You can see them going down all along the axis of this thing, and the wide halo of lower-grade mineralization around that. Here's a couple more views of it. We've actually, since we put these together, we've drilled deeper holes in this area that we published fairly recently, and those are showing that the gold system is just wide open to depth, and it'll take years and years and years to be able to define all that. So for people that are familiar with the Red Lake area, the big mine that I was talking about is the point of reference that everybody makes. So what I wanted to show with this long section here, so the earth is sliced at both these deposits along the long axis of the deposit, is our 4.2 kilometer long drill area is about the same as all the mine development at the Red Lake Gold Mine, which has produced itself about 25 million ounces over its 80-year plus mine life at about half an ounce per ton gold. It's just an absolute economic monster, this thing. It was the most profitable gold mine in the world for the better part of a decade when Goldcorp found this zone here, which doesn't outcrop its surface, by the way. So they found that and they mined it down to 2.5 kilometers vertical depth. So what we're getting at, the thing to keep in mind here is that when we put out the initial maiden resource, you can see I'm going to draw the box. It'll occur from there to about 400 meters depth, so it'll be like that. If I drew the same thing here at the main Red Lake Gold Mine, you could see that yes, there would be a lot of mineralization within that box, but most of the mineralization would not be contained within the box because most of it extends down below. So this is just to show you, like, the analogy here would be like if you were standing in the ground and your top of your head was at the surface. The initial maiden resource that we're planning to drill off here at the LP fault would be like drilling from the top of your head to about your shoulders, but the majority of your body would still be in the ground based on what you see, say here at the Red Lake Gold Mine. So we've only done a few deeper holes at this point because we have to concentrate on doing all the drilling that we need. You can see all the spaces here that still need to be drilled, and that density needs to go in. And once that dense drilling is completed, then we can issue the resource. But it doesn't mean that that's all the gold in the project. It just means it's what's in the near surface portion of the project. So just to get that sort of point across, I can't say that we have 25 million ounces on the property. We're not even going to know that for years and years. But what I could tell you, is that we're going to have quite a bit of gold in the near surface, and we look forward to disclosing what that is once we finish the drill program and all the calculations. And to talk about the size a little bit more in realistic terms, this is the biggest open pit gold mine in Canada. So it's one of the biggest open pit gold mines in the world. That's called Canadian Malartic, and that's operated by Agnico Eagle and Yamana. And that is the same pit outline superimposed on the LP fault that we're talking about here with Dixie. It ignores the fact we have the Dixie limb in the hinge zone there as well. So it shows you that, you know, we don't know how many ounces we have in the ground yet, but we know we have a big system that has the potential to have a lot of ounces, because this thing here is about 11 million ounces in the pit of about 1.08 grams per ton gold. And actually there's a big underground push to mine this low grade sort of 2 gram to 3 gram material that they have underground, which goes sort of plunging off in this direction. A picture of that too, right here. So relative valuations. So you want to compare apples to apples. You want to see what Great Bear could be worth, what the Dixie Project's LP fault could be worth. Well, let's look at, in the same scale, what big other deposits look like, you know. And these red scale bars, these are all 1 kilometer long on all these images. So what I've done, and I never saw anybody do this before, was put them all at the same scale so you can see what they look like. Keeping in mind, like I said, that I'm only going to be talking about the top portion of our deposit. Yes, we've drilled it deeper. Yes, we think it's going to go quite a bit deeper than that. But this is what we have available right now. But look at this. This is Canadian Malartic over here on this part of the project. So there's that pit that I told you about there. 3.5 kilometers long, biggest open pit mine in Canada. Here's the underground portion of that. The grade here in the pit is 1.08 grams. The grade underground is 2 to 3 grams per ton. But it's a big system. You can see that it extends for kilometers, similar to scale with what we're looking at here at the Dixie Project. The other one that's up here is a deposit I quite like. It's called Windfall, and that's operated by Osisko Mining. And you can see it's going to be a smaller, much smaller footprint than Malartic, but much higher grade. So, you know, this is probably going to be 10 to 15 grams, a lot of the material that's mined out of this thing. The one that's in the middle here is very interesting to us. This is Hemlo. It's owned by Barrick now. Used to be owned by separate mining companies. There was 3 companies that were mining it in conjunction with each other, but each owned a portion of it historically. It was the biggest gold discovery in Canada in the early 1980s. It really resuscitated the gold space, but that averaged about 8 grams per ton or 8.5 grams per ton, something in that range there. The difference is when you look at this, very high grade, moderate grade, low grade. And then if you look at the outline here, that's the red stuff is greater than 5 grams per ton. So that's a 5 gram per ton cutoff level basically, and it shows you the geometry that you see at Hemlo, which is basically this sort of irregular shape. But the thing is, wherever you drill within that shape, people were always impressed by Hemlo because it had that huge predictability. So you could put holes along this thing and you'd hit gold just in all locations. Of course, you know, it's not a regular outline, so there's areas that you would drill and just not get any gold at all. But within that sort of irregular pancake, it was extremely regular distribution of high-grade gold, and it's what made it probably the top mining project in Canada for a very long period of time. And of course, this is Detour Lake. This is operated by Kirkland Lake. And you can see there's the current pit design outline. There's another pit that they have here. Our chairman in Great Bear, Mike Kenyon, he operated Detour for many years. He was like the chair of the company, and we're quite familiar with the deposit. This one averages about 0.9 grams per ton gold. You know, then Kirkland was criticized taking it on because Kirkland was a high grade focused company, but they recognized the economic value of having something that big. The difference between these others is that if you look at Detour, these little red outlines here, that's the only locations you're really getting multi-gram material in that pit whatsoever. Most of it, that's fairly patchy, is, you know, I think you're looking at a 0.2 gram cutoff here for anything that's colored green or better. So you can see it's patchy, but it's really big and it's making a lot of money for Kirkland. What they don't have a lot of, because I just outlined the 5 gram or the gram plus material for you, is this, what we have here. More than 20 grams per ton over kilometers, you know, 5 to 20 grams per ton intercepts, you know, 3 to 5 grams per ton. So, and then of course the low grade around that. But what you're seeing is definitely the potential with what we're looking at for the kind of scales that you get with these major deposits. And the valuation points here are what's really important for making a decision about Great Bear as a potential investment, really, is this one was acquired for $4.9 billion. This one, I don't know, it was never consolidated until it was mined out basically, but I would guess that the valuation would be over $10 billion based on what the predictability, the size, the whole bit. This one here right now is valued at about $1.2 to $1.3 billion in the market. And this one right here, the last time it was sold for, I believe, about $3.5 or $3.9 billion. I have to look at the number exactly. So what we're worth currently right now is about $950 million. So we're looking at being able to generate, based on the size, scale, and quality of the system, something that has elements of all of these. It has the size of something like this, and the low grade. It has the high grade predictability. This is the most similar project geologically to what we see. It has high grade kind of chutes like you see at Windfall, and it has this sort of potential for system size that we see at Canadian Malarctic. And it's not really like any of these things exactly, but it's somewhat like all of these things. And where it's most like these projects is in terms of the physical footprint, size, and that excellent sort of potential. So who owns Great Bear right now? Well, increasingly, a lot of institutions. So early on, it was almost exclusively retail held because it was a discovery made out of the blue a few years ago. Nobody was really interested in it on the institutional side early on, but this portion of the pie has been growing steadily for the last number of months and over a year now. So our biggest shareholder is 1832 Funds in Toronto. That's Rob Cohen, very smart guy, keyed in on the value here with his partner Nawoika when she visited the project back a few years ago. We have Joe Foster in New York City. That's Van Eck. We're part of the GDXJ. And then these other guys, well, you'll be aware of BlackRock, Franklin Templeton. We had Sprott Junior Gold Mine ETF come in recently, and some specialist funds as well, like Tribeca, Earth Resources, Creighton Capital. These are sophisticated gold investor guys. So I just look at the state of the company right now. 57 million shares issued and outstanding, 61 fully diluted. These are the lowest share counts in the space. We have a market cap right now. It's actually about $950 million right now, about $90 million of cash, so a couple of years of operating capital on hand. And this, people that know about gold mining are buying more and more of the company. And insiders, guys like myself, other board members, advisors, we own about 10% of the company collectively. And I thought this would be a fun slide to put up. It's a little bit of commentary on the market and a bit of the gold cycle. So on the left, this is Barrick, ABX. So you're looking at Barrick. They have nothing to do with us other than the fact that they're really sort of just keyed to the gold price, and it shows you market trends. So I put some black bars on, which are the same on both of these graphs for placement. And you can see that everybody has had a pretty tough beginning of 2021, but some it's been much worse for others. So I look at this and I drew this rectangle, and I just kind of called it the rectangle of pain here over on the Barrick side. So the last part of Q4 2020 and Q1 2021, I would call this the crypto pain. It just kind of makes me laugh, but there is competition for dollars in the space, and some companies were hit very hard. Our rectangle of pain was very much smaller, and oddly enough, like if you look at the 3-year share performance here, Great Bear has been just on this upward trajectory. So at times it's got ahead of itself, at times during COVID it got behind itself, but generally it's got that bottom left to top right trajectory of a growing company with a major discovery on its hands. If you look at Barrick as a comparison, the gold market itself has been a lot choppier. So it's the same overall pattern, but it's actually more volatile in terms of behavior. And that's really odd because junior companies are supposed to be the really volatile ones. What has kept the value for us is just ongoing success. So I'm trying to write on a vertical screen here, but we are constantly hitting more gold mineralization. We're constantly expanding the system, and the further we go into it, the more it becomes obvious that we're looking at something exceptional, and that's really been a boon for us. So some of the analysts that cover the story here, it's a slide that was made by one of the banks, so it may be a little bit, it may not have all the analysts that cover us on it, but I'll laugh at that later. But the price targets are from about $22 a share to about $36 a share. There's the GDXJ index relative to Great Bear's performance, and you can see sort of the net asset value per share, sort of how that's increased over time. And then this is the, you try to look for a metric that says, are we overvalued or are we undervalued? And of course, I'm going to make the case that we're undervalued. And this is the numbers that sort of bear that out. So if you look at a PNAV basis for Great Bear, and you talk to the analysts and you look at what they project we have versus what we're currently valued at, we're trading at about a 0.42 times PNAV. The average of our peer group, and I'm not talking about the quality or anything of any of these guys, but the average is about 0.63 times PNAV. So we're trading below the group average, and we think we have a superior project, which we will be showing earlier next year with the resource disclosures and a PEA shortly there to follow. But if you look at the M&A transactions in the space recently, they occurred about a 0.8 times PNAV. And again, these are not necessarily major projects. Many of these are quite a bit smaller, but they're still occurring at a very healthy PNAV ratio. But the big projects, the big transactions that we're interested in here, the tier one asset precedent transactions, they trade at an average of about 1.5 times or 1.4 times PNAV. So the value case here with Great Bear is, putting the money where our mouth is and delivering the kind of, strong economics and strong resource that we're anticipating should get us, from the current valuation to some valuation more like these. You should be getting a valuation closer to 0.8. So this would be about 2 times where we currently are, anywhere up to 3.5 times where we currently are, to get us valued at the average of these other things here. So whether that's through M&A growth, whatever the case is, we would anticipate that there's quite a bit of room for growth here. And this is what tier one gold mines are. The reason I'm bringing this up is because it's widely recognized in the industry by our analyst pool that this may be what Great Bear has on its hands. Again, proof's in the pudding, got to keep drilling, got to put out the studies. But if that's right, there's only 30 of these projects arguably in the world. Certainly that number may even be as small as 17 projects. The important part here is these have more than 10-year mine lives. Now, think about the size of the gold system I was just describing to you. Can you imagine mining out something the size of a good part of downtown Toronto or the size of Central Park in New York in under 10 years? Well, it'd be very, very unlikely that would be possible. So, you have something on our hands that looks like it could be a 10-year plus mine life. And then when you're in the near surface and you're looking at bulk mineralization like we have, and of course we have high grade in ours as well, you can hit high production numbers. So the guys that are concerned with these are the Barricks and the Newmonts and the others, the major producers of the world. They define these things as 10-year mine lives and more than 500,000 years in ounce production. These are the proverbial hen's teeth of the mining industry, because although there are hundreds of gold mines in the world, there are maybe 17 of these on the planet. And if Great Bear has one of those, it's going to be exceptionally unusual for a junior to be sitting on that over the long term. And what are these tier one assets worth? Well, on average, about $265 an ounce. So with our current market cap, just running the numbers on it, that would mean that the market is expecting us to have about 3.5 million ounces of gold, which is smaller than what any of the analysts that are currently covering us believe that we have, just in the near surface, from surface to about 400 meters depth, and no comment on anything that we've drilled down below that already, although we've already drilled double that depth. So what are we going to do next year? What are our goals with the company? Well, we want to deliver an optimal near surface resource with really good economics based on that combination of high grade and bulk tonnage at the LP fault. And remember, it is not possible, absolutely impossible, for us to drill off the entire LP fault, Dixie Limb and Hinge zones in a maiden resource. Like, think about the Red Lake mine long section that I showed. It took them 80 years to drill all that off. It is not possible for us to do that in a short period of time. We wouldn't want to. We don't think we have to, because we think that the gold endowment and the economic potential of that near surface portion will be more than enough to justify developing the project further, getting it all the way down the field. And of course, we're going to have to show that with the studies that are coming out early next year. And remember, we really don't like drilling for its own sake. Our point is not to drill holes. Our point is to develop resources and economic projections and do enough drilling to show what the project may contain without doing too much where it just becomes a waste of shareholder money. And you can think about that when you look at other companies in this space. Like, some companies will take a zone and they'll drill the bloody thing every 10 meters or so. Well, the only reason that you're going to do do that is because there's a problem with your gold continuity, or you know the zone's not very big, and if you do big step outs, you're going to start missing. When we made the discovery at the LP fault, we stepped out every kilometer. The first 4 drill holes that we did were each 1 kilometer apart as we began doing the extensive, definition of how big the target could be. So, when you have continuity, when you have size, your step outs are big. We do not like to do drilling on a finer scale than needed because it's just a waste of money. So keep that in mind too when you're looking at the industry as well. So catalysts, what's going on? Why will Great Bear be interesting over the short term? Well, the clock's ticking down. We've drilled now, as I said, 375 drill holes in progress or done out of an estimated 400 drill holes that we need to get that resource done. So that's going to be months, not years, to finish off. So that is coming over the near term. And then, that shallow resource drilling, it's going to be complete this year. The publication of those numbers should come out early in 2022. We'll have very likely a PEA will follow in 2022. I think probably not too far after, but let the engineers make those decisions. The regular gold domain disclosures that we've been making, the high grade gold domains, the drill results, everything else, that's going to keep going. And this is, like I said, less than 100 holes now, or probably about 100 holes that we're still going to issue in terms of results this year in the latter half of the year, and another 50 drill holes from those satellite zones, the Dixieland and the Hinge zone there. And of course, all the work that you need to do on a project to bring it from exploration claims to mineral leases is underway, including all the environmental and permitting work, all the consultation work with local communities. That's all going on as well. So with that, I think I will stop talking. That's probably enough information for everybody.
Thank you, Chris. I'm Mark Reichman, the Noble Senior Analyst who provides research coverage of Great Bear Resources. I will be reading the questions submitted for Chris's response, and we do have quite a number of them. So the first is, while many believe that you have already demonstrated that Dixie has the potential to be a Tier 1 deposit, what, in your view, is the threshold that the Maiden resource needs to meet in terms of ounces to convince any skeptics?
That's a good question. We can't drill off the whole thing, So that's the I think I've made that clear with the images and everything. I think that if the Maiden resource comes out north of 5 million ounces or so, that would indicate probably a 10-year mine life or a 15-year mine life, or I think then that's probably a level that you'd want to go for a minimum. But it's less about the number of ounces and more for us about what will finish, what will actually fit into what's likely to be the open pit component of the project. So how many ounces of the total number of ounces drilled, say, just for random numbers, if it was several million ounces of gold that had been defined by the beginning of next year, and you had 4 or 5 that fit in an open pit, I think I'd be pretty happy, because then you'd be on the top of several million ounces going down below that. Now it could be more, in the pit. I have no idea at this point, because it's the engineers that are doing the. I can't say I have no idea. I have some pretty good ideas, but the engineers are working on that distribution. So in terms of being disappointed, I think this is more about economics than people really understand. It's not about the number of ounces, it's about the economics on the project more than anything. Because if you're Great Bear and you've got to make a decision about financing and building the project, you want to see things like a fast return on investment, because you absolutely know that you don't know how many ounces of gold are in the ground on the project in total, but you need enough defined in the near surface to make the mine building plan decisions and the money raising decisions about what kind of mine you're going to build, and how much that's going to cost, and how quick your investment is going to be returned. Looking at the data that we currently have, the high-grade component of gold going into the near surface at the LP fault doesn't have any parallels in the industry today for new discoveries. There are none that are like this. So what you're looking at here in terms of like it being beside the highway, it's going right to the surface. It has a power line right beside it, and it's a 15-minute drive from the heart of downtown Red Lake, which is one of the biggest mining capitals in the country. There is nothing else that has all those characteristics together, period. right? So what we think with all these characteristics together is that the economic potential of what we have in the near surface by itself is going to be sufficient to drive this forward, the project all the way through. And then over time, as you continue to drill and you continue to expand, you keep adding ounces, adding ounces, adding ounces, adding ounces with the drilling down to depth, the drilling along strike and into other areas. So it's less about the ounces, more about the economics. And that's the best answer I could give you. The analysts think anywhere between open pittable ounces in from 3.5 million ounces to 10 million ounces in an open pit. That really depends on what the cutoff grades are going to be and what kind of operation you want to build. If you want to build it bigger and lower grade, try to duplicate a Canadian Malarctic, you can go that way. If you want to do smaller and higher grade, you can go that way as well. So it's less about the ounces. That's really not that relevant. There's going to be enough ounces on this project.
That's a good segue to some of the other questions coming in.
Yeah.
One is for the Maiden resource, how will you determine cutoff grade and the gold price assumption?
Gold price assumption here, this project will work at very low gold prices, so it doesn't require gold to go higher. It doesn't even require gold to stay where it is right now, so that's not a factor. In terms of, sorry, what was the other question mark?
How will you determine the cutoff grade?
Cutoff grade will be dictated by the mine scheduling, especially in an open pit type scenario. It would depend on bench design and other factors. So because there's hundreds of meters of low grade mineralization around the high grade will be a dominant driver for how how deep it goes and all this in terms of that kind of design. But you'll end up stockpiling and running through a lot of low-grade material. And the break-even point on a project like this, if you look at a Canadian Malarctic as a comparison or a Detour Lake, typically they would be between 0.2 and 0.3 grams per ton would be levels that you would look for, but that could vary. I don't have the number in front of me because we haven't finished the work.
The next question is what work would continue into 2022 post Maiden resource estimate to ready a preliminary economic assessment?
Well, a lot of desktop work, engineering studies. We're doing environmental surveying. We're doing all kinds of other background data collection right now on the project. So that's all going to continue, and of course more drilling, because as I said, you can't. Even the first resource will only have a fraction of the gold in the project, in our view, based on the data that we see. So let's continue to expand that. I would love to see the initial resource and PEA kind of come out, and then have regular resource updates as you graft more and more ounces onto the project, on a regular basis, on a go-forward basis.
The next question is, would you elaborate on the environmental and permitting work that is required for development?
There's a standard process here in Ontario. There's so many gold mines in Ontario, both underground and open pit. Generally, it's environmental baseline survey work. So you want to do water quality assessment. You want to do dust, any sort of air quality assessment. You want to do wildlife studies. Our project is heavily clear cut. There's large open pit gravel mining operations on the project already. It's not underneath a lake or anything like that, so it doesn't have any direct impact on a body of water. So these are all things that you study as you go through, and of course with the fact that we have First Nations partners on the project, as do everybody in our area, we'll be doing mutual studies of like the environment and traditional land use and any other factors that may have a cultural significance. So far, there's been very little historical use here because there's no bodies of water on the project of any significance. So a lot of traditional land use would have been tied to that, and we just don't see that. We see a lot of forestry activity over decades, so it's like the equivalent of a forestry wheat field. It's been harvested and replanted many, many times, and it's being clear cut by the logging companies that are active in the area. So it's not sensitive in that point.
Here's one I'm not sure that you can answer it really, but is it more likely that an updated mineral resource estimate could produce an acquirer, or just narrow the field to potential JV partners with a PEA or feasibility study leading to a potential buyout?
It's a great question, and I don't think I can answer it. At the moment, if you look at M&A transactions that have gone on in Canada or even around the world recently, there aren't too many big ones of our size. There's a lot in the couple $100 million, few $100 million value. So Battle North in our area was purchased for, I believe it was $340 odd million by Evolution earlier this year. So the dominoes are starting to fall, but the big projects have not yet entered that chain. Ours is a big project and it's a high value acquisition. So there's there's a limited number of companies that would have the ability to go after it, or you could have a consortium like a group of companies. Really, it's not a priority for us because we're looking at something that other people just haven't found, and it's something that should be worth a lot more than it currently is. So I would like to see a lot more of the potential value turned into real value for Great Bear shareholders before we even really think about selling it or anything like that. Right now, we're developing the project, and the further we go with it, the more it's worth, and that's what we want to see.
And the next question is, would a mine be built around the LP fault with Arrow, Dixie, Limb, and Hinge offering future growth potential, or would they be included?
This is an interesting question. I think about it a lot, actually, but the LP fault is so big that it's kind of a standalone operation. But what I think would be a very likely occurrence would be that if you say it's a bulk tonnage open pit operation, you're going to take a lot of material out of the ground. You're going to have an optimized head grade going through a mill, and you're going to have a huge stockpile of low grade material. I think what might make sense is to be stockpiling the low grade, concurrently developing on the high grade underneath the LP fault, because the zone just keeps going. As you've seen, we've drilled it down to 800 meters and it's wide open. So if it's like everything else in the area, it'll go for kilometers. And then there's the Limb and the Hinge and the Arrow and all these other zones that we're interested in, which are satellitic. But if you develop the high grade ore sources from the other zones and mix that with low grade stockpile from the LP fault, you could maintain a very nice head grade going through a mill, and all that development on those other deposits is taking place based on the cash flow that you've got from the LP fault. So that's not money that you need to raise. It could be one hell of an optimal plan for getting the thing to go through. So it's kind of how I think it would most likely play out. But it depends who has it. The bigger the company that controls it, the more likely it's all developed simultaneously. The smaller the company that controls it, like a Great Bear, the more likely that it gets developed in sequence, or maybe something like I just laid out.
Thank you for joining us for this virtual roadshow presentation brought to you by Channelchek. View our YouTube channel for more video content, including C-suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and 6,000 other small and microcap companies.